Welcome back to Investing Talk Podcast. Today, we're going to zoom in on Fortuna Mining Corp. Fortuna Mining, it's a Canadian-based precious metals mining company, operations across multiple continents.
Wow.
You sent in your research on Fortuna, and we want to try to extract the key insights you need to know right now.
I think we can do that. Yeah, we've got a pretty compelling mix of info here. We've got a company overview, recent stock performance data, financial health assessments from 2024, a due diligence report, and some really interesting developments from early 2025. I think this should give us a pretty comprehensive understanding of Fortuna's position right now.
All right, let's get into it. So first, let's lay the groundwork. Fortuna Mining is in the business of extracting precious and base metals, mainly gold and silver, but also lead and zinc.
Great.
Their mining operations span Argentina, Burkina Faso, Côte d'Ivoire, Mexico, Peru, and Senegal.
Wow, that's a lot of places.
It is. With mines like Lindero, Yaramoko, Seguela, San Jose, and Coiloma under their management. So this spread across different metals and geographies seems pretty noteworthy. What jumps out at you initially about that?
I think what's notable here is the inherent stability that this kind of diversification can offer by operating in multiple countries and also dealing in a variety of commodities. Fortuna is less susceptible to downturns in a specific region or with just a single metal.
Makes sense.
So you know if one area is encountering some headwinds, others might provide a buffer. It also, I think, kind of indicates their proficiency in navigating these diverse regulatory landscapes.
Interesting. All right, let's turn to their recent stock market performance. See a bit of a contrast here. In the month leading up to April 4th, 2025, the stock experienced a slight dip, about 1.30% after hours.
After hours, okay.
But if we look at a longer time frame, the picture brightens up considerably. Over the past 6 months, the stock has surged by roughly 35.63%. And in the past year, it's up about 34.44%, even outperforming the U.S. metals and mining industry. This suggests some pretty intriguing underlying strength, despite recent volatility, which averaged around 7.9% weekly. So this is where it gets really interesting. What factors do you think are behind this divergence between the short-term dip and the more substantial long-term growth?
Well, short-term price declines often can just reflect investors taking profits or sometimes just broader market sentiment shifts, whereas longer-term gains typically signal a recognition of fundamental strengths and future potential. So the fact that Fortuna has outperformed its industry over 6 months and a year suggests that the market is acknowledging some positive underlying changes within the company.
All right, so they're looking ahead. They're seeing the potential.
I think so, yeah.
All right, let's examine their financial health based on the latest earnings report from 2024. The numbers appear quite encouraging. Revenue reached $1,062, a significant 26% increase compared to 2023. They also moved from a net loss in 2023 to a net income of $141.9, or 42 cents per share in 2024.
Oh, wow.
This improvement in EPS is a key highlight. Additionally, their debt-to-equity ratio is at a comfortable 8.6%. If we consider the bigger picture, what is this financial turnaround combined with manageable debt? Tell us about the company's stability.
I think the shift from a net loss to a substantial net income really indicates improved efficiency in their operations, or maybe more favorable pricing for the metals that they're producing. And the low debt-to-equity ratio really reinforces their stability, showing they aren't heavily reliant on borrowing, and they have a very strong financial base. This provides them with greater flexibility for future investments and the ability to kind of withstand potential economic challenges.
Now, the due diligence report offers even more granular detail on their financial performance. Their revenue has shown a consistent upward trend over the past 3 years, growing from $681.5 in 2022 to over $1 billion in 2024.
That's impressive.
They also reported a record free cash flow of $95.6 in Q4 2024 and $202.9 for the entire year. This is a considerable jump from previous periods. What's also interesting is that they achieved a positive net cash position of $58.8 by the end of 2024.
Okay.
This definitely paints a picture of increasing financial effectiveness. So this leads to a key question. How sustainable do you believe this level of free cash flow generation is, especially given the potential for production declines that have been noted?
Yeah, that's a critical consideration. While the recent free cash flow is very impressive, The analyst concerns regarding potential production declines are definitely important to address. So the sustainability of this cash flow will likely hinge on their ability to either maintain current production levels through operational improvements or successfully bring new productive assets online to compensate for any decreases. The exploration updates that we'll discuss later might offer some insight into this.
Okay, we'll get into those. Now, it's not an entirely positive picture. Analysts have flagged some potential downsides, including high operating costs and the possibility of future production decreases.
Okay.
On the other hand, their strengths are identified as a diverse asset base, robust financial health, and a well-executed capital allocation strategy. So how do we weigh these advantages against the potential disadvantages?
Well, it suggests a company with a strong foundation and a very clear strategic direction, but one that's facing some operational headwinds. Their diversification and strong financial position provide a buffer that potentially allows them to tackle these high costs and navigate any production issues. And their proven approach to capital allocation indicates that they're probably making well-informed decisions about where to invest for future growth and efficiency. It's a case of balancing, capitalizing on their strengths with mitigating their weaknesses.
Right, looking at their competitive landscape, Fortuna operates in a sector with well-established players, such as Pan American Silver, First Majestic Silver, and Wheaton Precious Metals. Fortuna's diversification across a range of metals, not just silver, along with its geographical spread, could be a significant advantage. What's particularly interesting is how does this broader focus on both precious and base metals impact their resilience compared to competitors who specialize in just one area?
So what's interesting here is that by not relying solely on one metal, they can benefit from price increases in different commodity markets. For instance, as silver prices decline, but gold or zinc prices rise, it can help stabilize their overall revenue.
Right.
Competitors that focus exclusively on silver may be more vulnerable to those price swings in that specific market. This diversification acts essentially as a natural hedge.
A built-in hedge.
Yeah.
Okay, recent developments in early 2025 provide further context. They reported a continuation of their financial recovery. In Q4 2024, with EPS reaching 4 cents, a significant year-over-year improvement. Revenue also increased, and free cash flow remained strong. They've also announced positive results from exploration activities at their Kingfisher and Sunbird deposits, hinting at future growth potential. Furthermore, their strategy includes selling off non-core assets like the San Jose mines, while increasing production at the Séguéla mine with a target of higher output by 2026.
Wow.
This strategic management of their assets appears quite deliberate. What do you think is the primary reason for their focus on the Séguéla mine?
Well, I think the emphasis on the Séguéla mine likely stems from its potential for higher production rates, or possibly lower operating cost, compared to the assets that they are divesting. Increasing production, there could be a key component of their strategy to address concerns about potential overall production declines and enhance profitability. It suggests that they are really concentrating their resources on what they believe to be their most promising assets.
Now, interestingly, the stock price experienced a notable 3.65% increase on March 18, 2025, following the announcement of their successful entry into lithium mining in addition to their strong financial performance.
Lithium mine.
Yeah. This move into lithium, driven by the increasing demand in the electric vehicle sector, could be a significant development. If we consider the broader industry trends, how impactful could this diversification into lithium be for Fortuna's long-term growth prospects?
If we consider the broader industry trends, I think this could be very impactful. The demand for lithium is projected to grow significantly with the increasing adoption of EVs and energy storage technologies.
Electric vehicles.
Yeah. By entering this market, Fortuna is positioning itself to capitalize on a major long-term trend, potentially broadening its revenue streams beyond precious and base metals, and tapping into a high-growth sector.
Very interesting. Now, of course, the mining industry inherently carries risks.
Of course.
Changes in regulations, environmental concerns, and the volatility of metal prices are always factors to consider. Fortuna's operations in various countries also introduce geopolitical risks.
Yeah, that's right.
From your perspective, what specific risks related to their diverse geographical operations might be most concerning?
This brings up a good point. Operating in multiple nations exposes them to a variety of regulatory and political risks specific to each jurisdiction, so, changes in mining laws, tax policies, or political instability in any of their operating regions could negatively affect their operations and profitability.
Makes sense.
Environmental regulations, which can vary considerably between countries, are another significant area of potential risk.
So really a lot to keep in mind. Overall, the information we've reviewed presents a pretty balanced picture. Fortuna has demonstrated a very strong financial recovery and is implementing strategic initiatives for future growth, particularly in the lithium sector. However, concerns regarding costs and potential production declines persist.
Right.
Recent analyst sentiment appears mixed, reflecting this combination of opportunity and risk.
So, taking all this information into account, the sources you provided depict a company at a very fascinating point in its trajectory. The financial turnaround is very substantial, and the strategic move into lithium offers a very compelling growth story. However, the potential for production declines and the inherent volatility of the mining sector mean that, careful monitoring of their future performance is essential. Especially upcoming earnings reports and updates on their Segrela and lithium operations will be really key for you.
Okay, so a lot to keep an eye on. Ultimately, Fortuna Mining presents a pretty complex investment case at this time. While the recent performance and strategic moves are encouraging, the identified risks warrant ongoing close attention. This leads to a crucial question for you to consider. How do you weigh the potential for significant growth in a volatile industry against the inherent risks associated with mining operations and commodity prices?
That's something to really carefully consider.
Lots to think about. Well, thanks for bringing this interesting company to our attention.
Oh, it's my pleasure.
We trust this has given you a clearer understanding of the key dynamics at play with Fortuna Mining. And if you found this analysis helpful, please subscribe to Investing Talk Podcast and leave us a like and a comment. We always appreciate your feedback and suggestions for future investigations. See you next time.